Today, I want to take a closer look at ASML Holdings. This is a semiconductor equipment giant. It is a monopoly in the lithography space, and it is one that can definitely benefit from the growth of semiconductor investing and just the overall semiconductor manufacturing. Now, this is the stock from its 52-week high. The stock is down roughly 32%, and in the past year, the stock is down roughly 18%. Now, I am going to go with a bold prediction here. And I think ASML is actually sitting at very, very cheap valuations. And this is one that would be great for long-term investors. And this is something that I normally don't do, as I believe ASML usually is one of those big tech giants that just kind of gives you market results, not really much beating the market. But now with ASML and current valuations, I want to take a closer look at finances, at PE ratio, why I believe this is a stock that is very attractive. And more importantly, ASML has finally turned on their buyback wallet again. And I think that's very bullish for investors. So let's take a closer look in today's episode. But first, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a special offer at fool.com/Jose, and check out my free daily semiconductor newsletter, whatthechip.happened.com.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So first, I want to take a closer look at valuation. So ASML's PE ratio forward, which is the end about 12 months from now, a little bit less than 12 months, is sitting at about 29.82 at current values. Now, PE ratio forward 1 year, which is the next 24 months, is down to 24.64. Now, this is a company that normally trades at more expensive valuations. The main reason is ASML, for those that are not familiar, is a company that provides semiconductor equipment solutions for your top players, your TSMC, who are designing and building the next chips for your phones, for your laptops, for your PCs, for your data centers, your AI accelerators, right? So their equipment is crucial. Now, we're going to see in a bit, though, the overall market has been very cyclical. Overall revenue has kind of taken a hit. While obviously we are kind of seeing this huge growth in AI chips, most of the volume at the end of the day comes from consumer products in forms of actual chip content. So while the AI market is growing, the consumer space has actually been somewhat weak. And that weakness in the consumer space has kind of forced or kind of created a market where your manufacturing players like TSMC, your Samsungs, your Intel, didn't really need to invest that much in manufacturing capabilities, but I do believe a tailwind is shifting. So right now, valuations is looking pretty attractive because the market is kind of in this weakness. But I believe in the upcoming quarters and in the upcoming years, we are going to see a turnaround stuff in the amount of volumes being needed for AI chips and for just consumer chips in general, where ASML can benefit. But we can see ASML, most of their overall net bookings were in 2021 and 2022, right? 26 billion euros in 2021 and 30 billion euros in 2022. And if you recall, during that time frame is when we had a lot of supply chain issues in the semiconductor market. We had a huge growth in consumer electronics as everybody was working from home, as kind of you had needed your work from home PC. You had a growth in kind of mobile market as well. So everybody was trying to buy a phone to do things like contactless pay, and a lot of growth in the consumer electronics. So obviously, when you start to see kind of a growth in consumer electronics, manufacturing lines also saw a growth. So TSMC was making as many chips as possible. So what did they end up doing? They ended up buying more ASML equipment so they can increase their manufacturing lines, right? Now, fast forward to 2023 and 2024, kind of the demand of consumer electronics has kind of died down. There hasn't really been a refresh cycle of something causing the consumers to buy new laptops, to buy new phones, right? So in response to that, companies like TSMC don't need to increase their manufacturing lines, right? So there's no need for them to buy lithography machines from ASML. Now, I believe that's going to change in the upcoming years. I mean, if we are entering into the world of robotics, AI PCs, AI phones, and just anything generated with autonomous vehicles, right? Drones, other types of mobilities, AR glasses, VR glasses, the amount of consumer goods or consumer electronic techs that I believe is going to be growing within the next 5 years. And you're going to see a huge demand for chip production. And if you're seeing a huge demand for chip production, you are going to need a nice amount of ASML machines. And TSMC recently mentioned in their most recent earnings that for 2025, they expect their capital budget to be between $38 billion to $42 billion. This is a huge growth versus their prior year. In 2024, they spent about $30 billion. So that is huge growth. And they mentioned 70% of that capital budget will be allocated for advanced process technology. Now, advanced process technology is mainly built using you need lithography machines, which is what ASML creates. So a good portion of the budget is going to go into ASML machines. And the main reason is this company expects growth, growth in the demand for chips. And many people might be saying, hey, Jose, why aren't AI chips driving much growth right now? You're seeing NVIDIA's H100 being sold out. Well, remember, I talked about manufacturing lines, and manufacturing lines really depend on volume. While NVIDIA's chips are very expensive and they're sold out, there's not a high volume like there is in the consumer space. The reason there's kind of a supply constraint in NVIDIA chips or AI chips is a whole different reason and has nothing to do with lithography at all. So that's just one reason why maybe the stock was pretty exciting in early 2024, mid 2024, when people were thinking, hey, look, AI chip demand means that we're going to see a growth in ASML equipment. But it's all about the volumes, and the consumer market is what runs the volume. And this is why the overall stock hasn't really performed well while the market was expecting. And luckily, if you were following this channel, this is not new news to you. But now I believe the growth in consumer techs is definitely going to be there. Now, there are some other great things that we should know about ASML. The next thing I want to discuss is ASML in forms of buyback is one that usually buys back a lot of shares. But in the past few quarters, it actually has started to slow down on some of their buybacks. And they actually even have a pretty cool Excel sheet that they update almost on a weekly basis. So if you want to know about it, go to ASML buyback program. And here you can kind of take a closer look at their history table. You can even download the overall Excel file. But ASML right now, you can see in December and most of January, the stock barely made any purchasing, right? They barely bought any stocks. And this to me was pretty shocking, as I did believe that the stock was kind of a little bit attractive, but it was weird that ASML was not buying. Now, if we kind of fast forward here into the end of January and early February, this company has started to buy back a nice amount of shares, right? We can see in February 14th, in the week of February 10th and the week of February 3rd, they bought roughly 500,000 of shares each week. And I believe this trend is going to continue, and they're buying at around 723 euros. I'm just going to kind of go back here and kind of convert 723 euros to USD. And that's about $755, which is where the stock is actually below right now. So ASML is gladly buying their own shares at roughly $750 and around that price point. So I believe that ASML is right now sitting at pretty attractive levels. The PE ratios are pretty good. The overall growth potential is there as the consumer electronic market, I believe, is expected to pick up. We have TSMC reporting that their capital expenditure is going to grow for this upcoming year due to the demand of overall chips, which again, you kind of have the robotics market, AI PCs, AI phones, and just the list goes on in overall tech innovation. Now, while the stock is definitely sitting at attractive price, I believe the market has to kind of get better results. And this could be a stock that could be kind of quiet money for a few quarters until we really start to see that turnaround story in their net bookings. And I don't know how long that's going to take. So for me, ASML is one of those stocks that right now, if I wanted, I would do accumulation phase with the mindset that I don't believe the stock could turn around this quarter or next quarter. But in the long term, I believe this is a stock that's going to completely outperform the SPY, the Qs, and any type of semiconductor ETF. So let me know your thoughts below. Do you believe the ASML is a buying opportunity right now, or do you think it's just an overvalued beast?